everybody. This is Toni Turner, and welcome to the market now as of Friday, October 14th at about 12:30 p.m. Eastern. Well, as you know, U.S. stocks fell this morning as the early earnings season started with a drop in profits for big banks, with main indexes quickly giving up an initial bounce after J.P. Morgan Chase, Morgan Stanley, Citigroup, and Wells Fargo all reported a slide in net income as choppy markets hurt investment banking activity and lenders set aside more funds to cover loan defaults. So that wasn't particularly happy start to earnings season, but of course it's far from over. So now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY, look at the hard right edge of the chart, the SPY was trading at $358.96. That's about $35.89 on the S&P 500 itself. Now we are right here, still 24% below the SPY's all-time closing high back on January 3rd, back here in January. So the SPY is still in a bear market. Anything below 20% is a bear market. If you look at a long-term chart, which of course I don't have up here, this is a daily chart. But if you look at a long-term chart, like a weekly or monthly, you'll see that the SPY has price support from the fourth quarter in 2020. So at the very end of 2020, it has price support down here in the 350 to 360 area. So that's a good thing. That's a good thing. It means that when price reached this area before, buyers came in and bought. Of course, there's no guarantee, but it's interesting to know that. Now, yesterday's low, look here where yesterday's market gapped down at the open, then rose swiftly and closed near yesterday's high. But the low yesterday, when it opened, at the open, it came in at $348.11. So we've got this 350, 360, right down here. We've got all this area here as potential price support. Again, there are no guarantees, but it's something to know. Now, bulls will want to cross their fingers that price does not fall below 350, or of course, we could see another leg down. Now, how do you watch for a bottom, a potential bottom? You have to have a higher low. So we've had that in a couple of instances. We had a very good higher low here in July. Now, higher low is no guarantee that it's going to be this fabulous uptrend that's just going to go up forever. That isn't it. So let's call it a tradable low, excuse me, for traders who want to get in and out relatively quickly or within a matter of days and kind of test the market, kind of, if it starts up, jump in quickly and keep a tight stop and get out quickly. That's actually the wisest thing to do. So sometimes we have rallies in the midst of these downtrends, which you can see a couple of them here. We had one here. We had an even low here in May, and then it bounced up in June, and we thought, oh, maybe this is, but it wasn't, came back down. So you've got to be willing to be kind of quick here when you're in a market like this, which can turn on a dime. Now, since we are moving into third quarter earnings season, this becoming the low here, the low, could be a big challenge, and I suspect we're going to have a bumpy ride for the next 3 or so weeks that we have earnings season. So please trade wisely and consider using hard stops with your broker if you trade to limit your risk. Our next chart today is the Invesco QQQ, a daily chart. The QQQ represents the Nasdaq 100, a major index in the market. Now, this index is full of momentum stocks like Apple, Amazon, Microsoft, Alphabet, Facebook, that whole group. Now, you can't see it on this chart, but the QQQ made its all-time closing high on November 19th, way back here, at $403.99. And if we look at today, where we're trading now, the Qs are trading at $262.07 at the moment. Now, this, where it's trading right now, is 35% below that all-time high we just talked about at about 404. And we are definitely in bear market territory. Of course, that doesn't last forever, but it can last long enough to make you want to be on the sidelines for a little while. Now, if you looked at that long-term chart I talked about with the SPY, the fourth quarter price support for the Qs sits at around 260. So we're cutting it close here at 262. Now, yesterday's low, when it gapped down at the open, was 254. And you can say, well, hey, Toni, that's below that prior long-term support. You're exactly right. But the nuance here is that it gapped down and then rose to close near a high. It didn't stay down here and go lower. That's the difference. So we need to pay attention to the 260 to 250 to 250 down to 254 level, up here to 260. We need to mind this zone right here in the coming week. Now, again, since the Qs and the SPY gapped down yesterday morning, but then rose, did not close there. The close is more important than the open. That was the good news. You know, are we getting close to a bottom, or at least a tradable bottom, we're going to call it? Well, earnings announcements from tech companies in the next 3 weeks are going to tell the SPY which way to go. So I think it's probably going to be a little wild and hairy, so please stay tuned and trade wisely. Our third chart for today, something we haven't traded before, but if you want to sit out earnings season in something that may be a little more stable, of course, we want it to trade according to our strategy here. And I'm looking at today the iShares Global Timber and Forestry ETF. It has 20 holdings, including Weyerhaeuser, Ryanair, West Fraser, and International Paper. Remember, wood is not only used for building homes, it has a myriad of uses. Now, when I captured this chart today, the WOOD is the symbol, was trading at $68, trading just above its 20-day moving average. The red line, it's been trading beneath its 50-day moving average for some time. The all-time high, of course, you can't see on this chart, was in May of 2021, and that was at $98.97. So that was at an all-time high, and of course, home prices were very, very high at that time and into this year. So it consolidated from May 2021. It continued consolidating into this year, and then started dropping, interestingly enough, in May of this year, off of those highs up at around 98 or so. Then it dropped down pretty dramatically here, dropped hard in June, and then rallied somewhat in August, dropped down in June to about 72 or so, rallied in August, back up above its 20-day, the red line, 50-day, the green line, then fell really hard, rallied a little bit, and fell hard again. Really did a dumpster dive here. And that has to do with rising interest rates and seeing, okay, home builders won't be building as much. Now, we'll have to see. This wood ETF many times can act kind of as a leading indicator. It usually steps kind of in front of some of the home building ETFs and companies. So we'll just have to see how this works here. But at any rate, if you kind of want to sit through something, as long as this is acting the way we want it to through earnings season, this may be a little safer place, again, if it behaves the way we want it to. In the coming week, as I said today, the wood ETF is trading at $68, just above its 20-day moving average. I'm looking at this as a potential bottom fishing play, but I'm not going to give it much room. So if in the coming week the WOOD can stay above the 66 level, and that's right about down in here. If it can stay above the 66 level, I will add a small position to my trading portfolio. My initial stop is going to be down here at $63.70. You can put your stop wherever you want, but I will buy few shares, so if it does start down, I won't have a big loss. If and when it rises above 70, which is this prior high back here at the end of September, if it moves and rises above 70, I will probably add to my position, and of course by then I'll have a trailing stop. So you may want to keep an eye on the wood, WOOD, in the coming week. And now, before we go on to the end of our program here, please know that if you'd like to become a more successful trader, please check out my trader training programs. You're going to like my simple strategies targeted to swing trading, trend trading, bottom fishing, and more. Our flagship product is 7 Steps to Successful Trading. Trade the Trend for Profits is going to be fantastic. Knowledge to have when this market starts up again for sure. How to read charts, great for novices, as is 3 winning setups. And bottom fish like a pro is another one that really is something you're going to want to know. These programs can help you increase your gains quickly and easily. To see all of my online training programs, just go to the link on this screen, or easier still, click on the orange button below. So until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.